So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV, everyone. My name is Walker America. I am going to be your host here for the next couple of hours on this beautiful Friday following Thanksgiving. I hope everybody ate way too much and did their best to orange pill their Uncle Jim, who is still convinced that Bitcoin is an absolute scam and just keeps his money in gold. I think just with the recent Bitcoin price action that we're seeing, it looks like at least a few of you succeeded in orange pilling some more family members. We're up to, I think, around 91,000 infinitely printable fiat dollar cuck bucks per Bitcoin, up from the low 80s last week. So yeah, it looks like, as always, it was a good time to buy the dip. I hope that you did. We've got a fun show for you here today. I'm going to be welcoming up here in a second Joe Consorti. He's the head of growth at Horizon. We're going to be talking about a lot of different things. One of the things we're going to focus on, though, today is Jamie Dimon and JP Morgan's interesting love-hate, let's be honest, mostly hate unless it makes them a profit, relationship with Bitcoin, also with other Bitcoin companies like Strategy, MSTR. it's a very interesting time right now. A lot of stuff is happening. Bitcoin CEOs like Jack Mallers are getting debanked by the likes of JP Morgan. What the heck is going on? At the same time, JP Morgan is offering new Bitcoin related products. So clearly they don't hate Bitcoin too much. I guess they just hate Bitcoin that's outside of their control. So let's bring Joe up to the stage here. Again, Joe's head of growth at Horizon. Joe, welcome. Thanks for joining. How's it going?
Going great, Walker. Thank you for having me. I'm still overcoming the tryptophan and sleepiness that's been induced by the amount of turkey that I ate yesterday. So I'm going to give it my good old college try. Thanks for having me on.
Well, that's all any of us can do. And it seems that right now, JP Morgan is really giving it the old banker try to do whatever they can to seemingly suppress anyone doing things with Bitcoin that is not them. At the same time, they obviously have changed their tune quite a bit on Bitcoin, at least everyone but Jamie Dimon has, in recent years, especially it seems like recent weeks. Maybe a good place for us to start out is to just sort of talk about what exactly is happening with relation to strategy, formerly MicroStrategy, MSTR. I've seen a lot of conflicting news about this. Michael Saylor himself had posted some things about it. You've got a bit of a better handle on this. Can you explain what exactly is going on there, just for us laymen out there?
Yeah, for sure. So all of this is speculation. However, there is a pretty decent trail of breadcrumbs that are pointing to this actually being the case. So basically, like, concerns over market manipulation have arisen over the last couple of days. JP Morgan themselves apparently sold $134 million or more in MicroStrategy shares. And upon people trying to withdraw their strategy shares and bring them to another brokerage, there were huge delays, right? Massive delays, like it taking more than a week when this should be a 1 to 2 day process at the very, very most. And so that raised concerns of JP Morgan potentially taking those strategy shares that didn't belong to them and then lending them out to short sellers. So effectively neutralizing any positive price action that buying MicroStrategy would have had, because for every share purchased through JP Morgan, they're lending it out to someone who's nakedly shorting it. And so it completely evens it out and doesn't lead to any positive price action for MicroStrategy. That's all speculation, but it's kind of supported by the kind of next component of this, which is that MSCI. They proposed to exclude firms from their index and that had more than 50% of Bitcoin on their balance sheet, which would delist MicroStrategy potentially and delist a number of other treasury companies. And so, like, you put both of these things together and also fold in what they recently did with Jack Mallers, who's obviously a very outspoken advocate of Bitcoin, CEO of Strike, and we'll get into that. And it kind of paints the picture that there may be a hit job in order to suppress not just Bitcoin treasury companies, but Bitcoin in and of itself. So that's effectively like the high level of what's going on here. Again, it's mostly speculation, but it's hard not to see this as a potential reality, especially given JP Morgan's history and their shady business deals that they've done.
Well, yeah. So this is the thing, and I appreciate the breakdown there. JP Morgan, and I mean Jamie Dimon specifically, as you know, the one who's actually running JP Morgan. It's been interesting to me because over the years we've sort of seen this growing divergence between the things that Jamie Dimon has said very publicly about Bitcoin. None of them are ever very nice. And then the things that JP Morgan is sort of doing behind the scenes, slowly kind of bringing in, folding in some of these Bitcoin related products. And I feel like a lot of that sort of accelerated, especially with the launch of the Bitcoin ETFs. You know, Larry Fink sort of gives his stamp of approval, and you start looking pretty silly for not paying attention to Bitcoin as this kind of emergent phenomenon. But still, Jamie Dimon has been vocally anti-Bitcoin. I mean, I think at one point, I'm forgetting exactly when he said this, but he essentially claimed that Bitcoin, is going to be, 10 years, it'll be closed down. Closed down. He still thinks of Bitcoin as a company, apparently, or that's how he presents himself publicly. But then this week they're launching some sort of like a Bitcoin bond. I don't fully understand what the product is. I understand it's on kind of longer time frames. If it doesn't hit this price by 2028, such and such happens. Can we talk about that a little bit? I think this also helps set the stage for just sort of everything that's happening. JP Morgan finding itself a lot of closed down accounts. It seems a lot of people being very vocally anti JP Morgan, given everything they've done. Can you talk a little bit about this bit bond? Is this actually like a bit bond? What are we talking about here? I know it's related to IBIT, but can you break that down for us as well?
Yeah, so it's not necessarily a bit bomb, but it's a step in that direction. So what JP Morgan is now offering is what's called a structured note, which is a hybrid financial instrument that combines a bond with a derivative. So it's quite confusing, and this is even something that I had to look into before I made a video about it. But effectively, what it does is it blends a debt obligation, so a bond, with a derivative. So in this case, options on IBIT. Now, basically, like functionally, the way that it works is that IBIT being the underlying asset, if Bitcoin is flat or slightly up in 2026, then the note auto calls, which means that it's taken back in by the bank and the investor gets their capital, and that will be a 16% return. So basically, if Bitcoin does well next year, then the investor will get a 16% return. But if IBIT is down next year, then this note will stay active in 2026. And ideally by then, Bitcoin will do well. So it's just another way of packaging Bitcoin differently and giving investors exposure to it who may not be able to purchase spot Bitcoin directly or purchase IBIT directly. Specifically, who this is targeting, it's targeting like these sort of sophisticated investors who are more familiar with complex financial products, and they want downside protection. So basically, the way this note is structured is such that in a way where if they purchase it, if Bitcoin goes down, then the note stays alive. If Bitcoin does exceedingly well next year, then the investor gets their payout. If we see a 30 to 40% drop, then all of the principal gets refunded.
Okay, okay, so interesting. So again, I mean, we have we have them sort of doing very conflicting things right now. We mentioned earlier Jack Mallers, the CEO of Strike, a very well-known Bitcoin company. I mean, and Mallers has been, of course, very vocally critical of Jamie Dimon and J.P. Morgan, famously coining the term Jeffrey Epstein's banker, referring to Jamie Dimon after he made some, usually derogatory remarks about Bitcoin, and Mallers fired back in the way that only Mallers can. Now, he recently I think this was just a couple of days ago, he got debanked. They sent him a letter saying we are shutting you off from JP Morgan. They would not give him basically any actual indication of what it was that did that. Presumably, though, it is just his proximity to Bitcoin. Maybe calling Jamie Dimon Jeffrey Epstein's banker played some small part in it. I don't know. But I mean, how do you look at this bigger picture in terms of what exactly JP Morgan is positioning to do? It seems like, to me, I mean, if I want to put on my conspiracy hat, they've been fading Bitcoin for so many years to, oh, this is nothing, this is worthless, this is, essentially going with the Warren Buffett, or Charlie Munger rat poison squared type of discussions about Bitcoin, dismissing it, not a serious thing, not a thing anyone can look at. At one point, I think Jamie Dimon said to the guys on CNBC, stop asking me about Bitcoin. Like I'm done talking about Bitcoin, but clearly he's been talking about it behind the scenes with his teams. Clearly they understand what's happening here. They understand the transition that's underway. I mean, do you think was this sort of their plan all along, to sort of just try and kind of fade Bitcoin, to dismiss it, whatever, but then, when they're ready, they've snapped their fingers, they turn on the light switch, and now, hey, don't buy that, that criminal Bitcoin, that real Bitcoin. Come and, buy our structured Bitcoin products. I mean, or am I just being too conspiratorial, and this is just, maybe they've had just a change of heart?
I think it's, as most things are considered, the truth is probably found somewhere in the middle. Like the way that I think of this is that Bitcoin was hugely dismissed for a very long time. And that quote that you were talking about, I looked it up while you were talking. 8 years ago, Jamie Dimon said that in 10 years, Bitcoin will be shut down. Some crazy thing like that just reveals a huge lack of understanding. I think everything changed though when they realized how profitable these ETFs could be for them. BlackRock's IBIT in the first almost 24 months now, coming up on 24 months that it will have been live, has been the single most profitable ETF for BlackRock in their history. And so they're now seeing that, hey, we may not believe in Bitcoin, but at the very least, it's a huge way for us to farm fees. So either you could interpret this from a fully incentive-based point of view, which is that they're just using this in order to farm fees. And as a result, a lot of the FUD that they've been pushing, debanking Jack Mallers, et cetera, is just a way for them to accumulate cheap Bitcoin, create these financial products, before they once again put steam behind the Bitcoin train and begin becoming the Bitcoin marketing department that they have been over the last several years. Or you could say that like they actually have had a change of heart and they're being very genuine. I would say that the truth probably lies somewhere in the middle. Look, the debanking of Jack Mallers is kind of insane. I thought we were over and done with this in 2020 and 2021. Like this whole idea of saying bad things in the United States could get you to lose your bank account. But apparently we're not, right? Apparently being, a human trafficker is a more palatable option for JP Morgan than banking somebody who just takes issue with the way that the company is run. It's completely insane to me, but I think at the end of the day, this is good, a net positive for Bitcoin adoption. IBIT has to go through, and as is the case with all US ETFs, they have to go through regular, very, very rigorous auditing processes. So I'm not of the belief that this is necessarily paper Bitcoin. I do think that these tools will be helpful in bringing Bitcoin to new investors, but personally, at this point in time, I think it's purely from a fee farming perspective. I don't think they believe in Bitcoin as a technology, as is the case with most asset allocators and banks and institutions. I have a feeling they're just in it for the fees.
Yeah. Well, I guess we shouldn't be surprised there at all, right? And then, this is a great time to remind folks that, especially if you are, if you're listening to this right now and you're a humble pleb stacking sats or just however you identify as an individual, whatever, pleb or elite, you can still get good old fashioned spot Bitcoin, take it into self-custody and cold storage, and really move along that sovereignty spectrum in a positive direction. Now, I think that, again, I'm in agreement with you that these like Bitcoin ETFs were a huge step forward in adoption, also a natural step. Like whether you like them or not, it was going to happen. Same thing as companies buying Bitcoin was going to happen. MicroStrategy led the charge. It took a couple of years, but now they got a very large lead because of that. I think they're just right on the cusp of 650,000 Bitcoin. Is that at current time? An insane amount of Bitcoin, an unfathomably large amount of Bitcoin. But that's that first mover advantage at play, right? And so I think that it seems to me there's just a growing recognition that this cannot be ignored. That we've gotten to a point, we've crossed the Rubicon, the genie is out of the bottle, whatever you want to say. We've gotten to a point where there's no going back. And Wall Street is realizing that. They're also realizing, I think, that they got a bit of a late start on this, right? Now it's still only it's only a $2 trillion asset class right now, only, but that's pretty tiny compared to the total asset value of the world. You had a great tweet maybe a couple months ago, something about it's a $100 or $1,000 trillion asset, that's selling for $2 trillion. I think was something to the effect of your tweet. I think a lot of people right now, let me frame it this way, are seeing the Bitcoin ETFs. They're seeing folks like JP Morgan get on board. You got Larry Fink and Jamie Dimon. Well, Larry Fink's talking positively about it. Jamie Dimon still no. It's, buy my Bitcoin product, not buy Bitcoin. But I think a lot of people, even with the recent price correction, they look at Bitcoin right now and they have this feeling that, well, I must be too late because look, the biggest asset managers in the world are now talking about Bitcoin. Where is there any alpha left, basically? Where do you think we're at in that? Because to me, it still feels incredibly early. You talk to the average person on the street and it really feels incredibly early. What's your perspective on this, even with all of these new types of products coming out, the Wall Streetization, financialization of Bitcoin? Are we still early? If so, how early are we?
We're extremely early. I think it all depends on your time horizon, right? Pun intended. It's really good that we named our company Horizon because now everybody uses our company name inadvertently. But that tweet that you were referencing, I said something like Bitcoin is a $100 trillion idea currently valued at $2.2 trillion. And I said, thank you for your attention to this matter. Yeah. If you're thinking in multiple decades, right, not just like to the end of this next 5 years where Bitcoin's price will be, then Bitcoin is still very early on. And another way to think about this is, okay, the bankers are now in on this, right? The institutional allocators are buying in size. They're creating exotic derivatives and financial products specifically for Bitcoin. I'm too late to the party. That's the wrong way of thinking about it. The correct way of thinking about it is now all of these pools of capital are investing in Bitcoin. Chances are they believe in this for the long haul, right? Not only are they investing in Bitcoin, but they're creating new tools and instruments for other people with way more money than you or I to invest in this product, to invest in this asset, rather. Freudian slip there. I promise I don't work for Jamie Dimon. So I would say that we are still extremely early on. Like the financialization of an asset is proof positive that we are just now getting to the point where this asset is monetizing. It's just now reaching escape velocity, if you will, right? It wasn't 5 years ago that China banned Bitcoin mining, and now 5 years later, we have this whole suite of US-based ETFs. We now have the biggest bank in the world, the most globally systemic important bank, regardless of who runs it, creating financialized Bitcoin products. And so for the pleb that's listening, or just for the individual stat stacker that's listening, I wouldn't necessarily look at all of these developments and say, well, I'm too late to the party. Bitcoin's going to average the returns of the S&P 500 over the next 5, 10, 20 years. I would take the opposite perspective and say these developments are massively bullish for this asset. And it's an asset that's designed to perform exceedingly well relative to other assets over the next 5 years, 10 years, 20 years, right? The fiat problem is one that knows no end. And we've seen time and again, every time they try to correct this, we try to slow spending. We try to cut government waste. None of it works, right? So they're going to need to print more money than they take in. The amount of spending that we're doing every single year is only rising. This is a trend that's not going to stop. And so hard assets are going to be the assets that outperform. And Bitcoin is the hardest of them all. It's the only absolutely finite asset in the world from a financial perspective. Of course, the other absolutely finite asset in the world is time, but it's not a monetary asset. And so essentially, like, Bitcoin is slated to outperform over the next 10, 20, 30 years as this problem accelerates. It's the apex head for that problem. And so I wouldn't consider us early if you zoom out and look at the macro perspective as to why Bitcoin exists in the first place. Each of these financial products, each of these new cohorts that are coming online to buy Bitcoin, that's just one more vote of confidence that this asset has a major future.
Yeah, I mean, you've seen now just in like the past couple of weeks, MicroStrategy, of course, continues to buy. It was like another, $830 million purchase. You've got El Salvador added a massive amount to its nation state level stack, over 1,000 Bitcoin. You've also just recently, I think on the 20th, you had the state of Texas adding something like $10 million in Bitcoin. I'm not sure if it was through IBIT or direct exposure, but the state of Texas acquiring Bitcoin. I mean, you see all this stuff happening, and this is not even to mention all the Wall Street machinations that are going on at the same time, right? But you see all this happening, and it just feels like at the same time the price has been somewhat boring. People have been very bored with the price. We're basically flat on the year or down a little bit on the year, which I think people really did not expect. You've now got folks who are looking at Bitcoin at 80,000 or whatever it was last week and thinking, as people often do when Bitcoin takes a dip, well, you know what, I'm gonna wait and buy lower because it must be going lower. But at the same time, you have all of these insanely bullish narratives stacking up at the same time. As price, then price seems very disconnected from all of the reality, all of the facts on the ground, right? Where are you at in terms of what I think has been one of the very hot debate topics of this cycle, which is, do cycles even exist at all? Did they ever exist? Do they still exist? If they did exist, is it now broken? Is this time different, or is this time the same? Where are you at with this? How are you looking at it? Do you have a firm kind of belief one way or the other?
Really good question. I would fire up my Bloomberg terminal and pull up a chart. It's of a chart of the ISM PMI, which is this tracker of the business cycle. Essentially, it shows whether or not the U.S. economy is expanding or contracting or just stalling out. But I'm connected to Wi-Fi right now, and I tried to fire it up earlier, and it destroyed my connection. So I won't do that, but I'll describe the chart. I don't think the 4-year cycle ever existed for Bitcoin, and I'll explain why. Bitcoin is an extremely small asset. Even at $2.2 trillion, if you take a look at it relative to gold, relative to the size of US equities, it's very, very tiny. But as it grows, it becomes increasingly more beholden to US markets writ large, right? Bitcoin isn't traded in a vacuum, right? I love to think that everybody's exactly like me and the only asset that they hold is Bitcoin, but they trade Bitcoin along with literally everything else. And so when the US economy is doing exceedingly well, expectations for the next month are better than the prior month. People bid equities. It's just what they do. Bitcoin is traded like an equity, in today's day and age in 2025. And so this chart is really telling. And it kind of showcases that the 4-year cycle, right? This idea that Bitcoin sort of tops 12 to 18 months after the halving, and then it has this massive bear market. It kind of shows that it never really held any water. It simply shows that Bitcoin tops within a couple of months of the US economy hitting peak expansion. And then as we move into contraction, Bitcoin starts falling. And then once again, as we inflect higher and the US economy begins expanding again, Bitcoin starts rising again from its bear market bottom. And it's an extremely telling chart because it shows that Bitcoin is, from a price perspective, is less beholden to its own native factors like the halving and more beholden to the US economy writ large and the credit cycle and what that's doing. And so that's very freeing because it can allow you to look at Bitcoin from a 30,000 foot view instead of thinking of it solely in a vacuum and just wondering and speculating and having, you know, this massive whiteboard with a bunch of sticky notes on it and trying to piece together what's happening. And what you see in the chart is very revealing, and it's that the US economy has effectively stalled out since 2022. It hasn't been an expansion. It hasn't necessarily been in contraction. There's been this period of like, when are things going to get better? It feels like we've been on the tip of a recession for 3 years, but it hasn't happened. We haven't seen outright expansion. We've seen it in a couple of tech sectors, but services and manufacturing at large in the US haven't really expanded. They've kind of just flatlined for the last 3 years. And so Bitcoin hasn't necessarily had this explosive price action that we're really used to. And that lines up more with Bitcoin's tops and bottoms and its inflection points than the 4-year cycle does. And where we are now, just to give a perspective on moving forward, we're at a point where 3 days from now, if I'm not mistaken, December 1st, the Fed is going to end quantitative tightening. It's going to end the rundown in assets on its balance sheet. And regardless of whether people think the re-expansion of the balance sheet is a direct liquidity injection into risk assets or not, that's fine. But for investors and for banks, this is a massive development, right? Banks have been running scarce on reserves for quite some time. When banks are once again re-imbued with reserves as the Fed begins expanding its balance sheet again, then banks are going to want to lend more, right? Credit conditions are going to loosen up. Conditions for US businesses are going to improve. That's going to make investors extremely confident. And so I think we are at the end of these doldrums that we've experienced for the last 3 years, which have largely been as a result of the Fed removing liquidity from the system. And it's only a matter of time before the US economy begins re-expanding again. Investors move out on the risk curve and Bitcoin once again starts appreciating. So that's kind of my take on it. Bitcoin has not necessarily been beholden to this 4-year cycle driven by the halving. It's more so impacted by the business cycle and the credit cycle, both of which in my mind are on the cusp of once again re-expanding.
And I mean, and I think it's a fair argument when you look at the data. I think the other argument is that if the halvings do have some impact, and I'm still very much, I go back and forth on this, let's say. But if they do have some impact, one would believe that perhaps their impact would be diminishing over time. But let's see. I think that
because
so much of this,
95% of the Bitcoin supply is now mined. So
it's right. It's out there. And I mean, clearly, you've seen all of the, a lot of people put together analysis around, oh, look, just MicroStrategy alone has bought, X many times the current, the amount of Bitcoin that are being mined every day. But at the same time, you've got massive OG whales who have said, well, I think this is the right time for me to exit a position on 80,000 Bitcoin, which is, again, a shockingly large number of Bitcoin. You can bet that if they're selling 80,000 Bitcoin, they have more than that to sell too, which again, shocking. I think that's ultimately a good thing. Bitcoin distributing out and broadening its base of ownership, I think is good. It's natural. It's what you would want to see happen too. That's going to decrease volatility in the long term. I also think it's fascinating. You mentioned the Fed moving back into a QE. We'll see if it's to infinity again, but ultimately nothing stops this train, as Lynn Alden would say. Fiscal dominance is the reality. They have to keep expanding the money supply. It's the only way that this can keeps getting kicked down the road. Now we're looking at coming to the end of this tightening period. But what has been fascinating to me is that over the past couple of years, I mean, starting during the Biden administration, M2 money supply was shrinking. The interest rates were raised at a historically rapid pace. We went into aggressively tight monetary conditions, and yet Bitcoin performed pretty darn well. It went up from its bottom of 16K in 2022, and then in 2025 made it all the way to 126K. I mean, that's a shocking move, right? And then now we're back down, languishing in the doldrums of the low 90Ks. But I mean, do you think that given how solid Bitcoin's performance was during a period where everybody, a lot of Bitcoin critics would love to say, well, Bitcoin only will go up when monetary conditions are loose, when liquidity is injected into the system. But we've now seen direct proof of that the opposite can also be true. When there's an appetite for it, Bitcoin can move kind of regardless of the monetary conditions. But obviously it benefits, every finite asset. Well, Bitcoin's the only finite asset. Every relatively scarce asset benefits whenever there's a lot of liquidity injected in the system. Granted, we all ultimately pay the price because everything gets more expensive forever. Our money buys less. But do you think that as we get into this period of quantitative easing again, I mean, do you think there's still a lot of room left to run for Bitcoin? If this 4-year, going by the assumption that you have that the 4-year cycles don't even exist, that a lot of this is driven by the business cycle, the credit cycle, heck, the political cycle, which intersects with all of them, where do you see this going here in the next, I'd love kind of your, okay, what's the 1 to 2 year time horizon? And then what's your 5 to 10 year? How are you looking at this? I mean, do we still have these dramatic drawdowns, these deep depths of the bears, or are we sort of past that? Yeah, we'll see some corrections, but now we're just going to, get bored on the way up to 1 million, let's say, as a lot of people suggested.
Yeah, so I think it's the latter, right? And for a couple of reasons. I want to share this image. It's a chart that I have of the Fed's balance sheet paired with the Fed funds rate, which is the Fed's main policy rate, and then Bitcoin's price in orange, if that can be shared. If not, I can describe it. But it's showing exactly what you were talking about, which is that it's right here. I had to take a screenshot from a prior tweet because I can't load up my terminal now. But you can see here, as the Fed tightened, right, from basically near zero, right? The peak of the policy rate window for Fed funds was 25 basis points or 50 basis points. So rates were literally at zero, all the way up to a terminal rate of 5.5%. So this massive increase in the price of money, Bitcoin managed to rise from $16,000 all the way up to 126K. Now, granted, the Fed began its easing cycle back last September. And so, this leg that Bitcoin went from about $55,000 to $60,000 to 126, that coincided with the Fed bringing rates down. But this was all during a time where the Fed was reducing its balance sheet. It was allowing the mortgage-backed securities and the U.S. Treasuries and other assets that it held to mature all the way down from $9 trillion in size to $6.5 trillion, which is where it is today. And reserves are now once again considered scarce. So for me, this is a huge vote of confidence in Bitcoin's direction. I'm like, okay, it's not just an asset that does well when the money printer is flooding the streets with new cash. It actually does well regardless of that. And so for me, I tend to think that we're moving into a regime where Bitcoin, it doesn't necessarily need the money printer to be on all the time, because the money printer will be going on and off. There will be transient periods where it's on, transient periods when it's off. I think we'll be bored all the way up to 250K. Like my 2-year time horizon is that within 2 years, we're at $250,000 and beyond. 5 to 10 year time horizon is that we're going to be, at $1 million and beyond. And kind of the reasons that I'm saying that, one of the main ones is because of this structural bid that you now see underneath Bitcoin. January 2024, these ETFs launched, and we've heard so much about the ETFs ad nauseum over the last several years. But the reason I'm so bullish on Bitcoin as a result of them is that if you look at Bitcoin's price since the October top, October 6th, literally to the day, there was a Reddit post that said, Bitcoin's going to top October 6th, because if you look at the peak to trough, blah, 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 there was all this really crazy pseudoscience astrology stuff. And he said Bitcoin would top on October 6th, and it did. But if you look at Bitcoin from that date to when it had its 34% drawdown all the way to nearly $80,000 or under $80,000, so it was a 34% drawdown. The assets within the ETFs only fell by about 7%. So the pension funds, the retirees, the people who are just buying biweekly with a chunk of their paycheck have more diamond hands than you or I, or these OG holders who have been selling. And so for me, that's extremely important as Bitcoin matures. And it tells me that, like, okay, if people are just buying biweekly with their paycheck and they're much less sensitive to these price drawdowns, they're much less likely to be drawn into this massive selling event. And that tells me that the days of 50, 60, 75% peak to trough, bull to bear market drawdowns are behind us, right? This is an asset that people just passively allocate to now. And as it becomes more popular, these drawdowns are going to become less and less frequent. And so that's the way that I view Bitcoin's price action now. We've had 3 separate 30% drawdowns in Bitcoin during this bull market, actually just during the last 18 months alone. And so for me, I think that that's the going way forward, right? We see these relatively large drawdowns in US equity terms, these small drawdowns in historical Bitcoin terms, followed by these rallies and these extended periods of chop. And we just get bored all the way up to 250,000, when Bitcoin will be a $5 trillion asset, all the way to $1 million when Bitcoin will be a $25 trillion asset, and on and on and on. I think that's just the going way forward.
Yeah, It's certainly going to, I think, surprise a lot of people who have been relishing in Bitcoin's recent dips. The bears have come out in full force. The fiat economists have been gloating. The gold bugs have been, saying "I told you so" ad nauseum. Let's see. Time ultimately will tell, and I think Bitcoin's history is full of examples of time making fools of Bitcoin bears. We're going to go to a quick commercial break, then come right back. I got a bunch more questions for you, Joe. So, folks, we're going to cut to a commercial. Don't touch that dial. We will be right back in just a couple of minutes with more Joe Consorti time. Stay tuned.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, his family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, his family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV, everyone. I am Walker America. I am here with Joe Consorti. He is the head of growth at Horizon. We've been talking about Bitcoin, about JP Morgan, about structural shifts in this industry and what happens next. You know, Joe, I'd love to get your thoughts on something. Just we've obviously seen a lot of talk about, let's say, the financialization. We've been talking about it ourselves of Bitcoin and these products. At the same time, you've got some really interesting, I think, counter narratives to that. You've been seeing home miners, like famously, a lot, home miners solo mining Bitcoin blocks, like incredible, getting those 3.125 Bitcoin.
It's brutal. Every time I see one of those headlines, I check if it's mine, and I'm just so upset every time.
I do the exact same thing. Maybe one of these times it will be, because I've got a little home miner as well. So far, no luck. But keeping my fingers crossed. I'm not much of a gambler. I don't buy lottery tickets. But if I do like playing the Bitcoin lottery with the solo miner. There's something about that. So you've got that. I think that's a hugely let's say democratizing force within Bitcoin, right? You've also have recently, just in the past couple of weeks, massive announcements from Square regarding opening up Bitcoin payments for 4 million plus merchants that now on their Square terminals have the ability to accept Bitcoin. So you've got things on the mining side, things on the medium of exchange side. At the same time, you've got these other sort of narratives around Bitcoin as a pristine store of value, the perfect type of, let's say, sound monetary asset. Now, I think that from my personal perspective, Bitcoin is, it's a store of value, it's a medium of exchange, and it's a unit of account. But there seems to be these warring narratives right now. I'm wondering if you think this is just something that's very natural as far as Bitcoin's adoption curve. That, of course, especially in the West, we see more of a store of value type adoption first, because not as many people. I mean, unless you're Jack Mallers getting debanked by JP Morgan, most people have access to banking. But hey, stories like this, I think, make people realize exactly why you need Bitcoin in the first place. But where are you at with this in terms of the narrative? I think there's kind of two, let's say, two different sides to this, and I think they're ultimately both in agreement about Bitcoin being the solution, but they come at it from different ways. You've got sort of the Michael Saylor idea that, look, Bitcoin just needs to be, it just needs to be perfect, a perfect asset, a perfect way to store value. You've got folks like Jack Dorsey saying if Bitcoin isn't used as a medium of exchange, it's ultimately not really achieving its true mission. Where are you at with that? I mean, do you think that these things are incompatible, or is this just something that's going to naturally happen as Bitcoin people figure out Bitcoin? Bitcoin's still a teenager, right? It's still young. How do you think about this?
Yeah, so it's really complex. I'm of the opinion that the purpose of a system is what it does, right? And so even though on the dark mode white paper behind me that the audience can't see, it says, peer-to-peer electronic cash system. How Bitcoin has been treated in the West, where most of the capital comes from in order to invest in Bitcoin, is that of a store of value. And so for us in the West versus, folks living elsewhere, the store of value problem is our chief concern, right? The American dream has been robbed of the American people over the last, 54 years since we departed the gold standard, in that, most people think that if I stockpile cash in my savings account, I'm going to be okay. And they're not okay, right? They slowly find through the amount of debt that they're taking on, plus the fact that their cash isn't actually storing their value into the future, that basically everybody needs to become an investor in financial assets, not just to get ahead, but to just keep their head above water with the amount of, with how expensive everything is. And so the chief concern for those living in the West is a store of value. And so I think that the narrative for Bitcoin being a store of value is one that I can sorely get behind. Obviously, when you talk about monetizing money, when you talk about a money that's going from 0 to 1 effectively, which is what Bitcoin is doing, you go from it being a collectible to a store of value to medium of exchange. Bitcoin is now firmly out of the collectible woods over the last decade. It's one of the reasons that you see the OG holders selling now, because they have a deep and liquid market in order to sell their coins into. Previously, they didn't have that, right? If they dumped their 80,000 Bitcoin, that would have completely tanked the market. Whereas now you have this really massive bid on the other side who's willing to absorb all of that. And so for us here in the West, store of value is the thing that matters most. That's kind of the Michael Saylor view of the world. The Jack Dorsey view of Bitcoin is that it needs to be a medium of exchange. Otherwise, it's it failed its mission. I think the medium of exchange thing is something that will be more important to us in the West, but I don't think it's going to be something that will be an acute problem for you or I, Walker, in our lifetimes. I really don't. And this is not me being complacent. This is me trying to be realistic. I do think that the US dollar has bought at least several decades worth of time to remain the world's reserve currency. and we'll be able to freely transact in that without issue for the foreseeable future. I do believe, though, with the current rate of debt increase in the United States, that perhaps a medium of exchange is going to become the sole priority for Bitcoin owners, and it's going to be the driving narrative. But for now, it's one that is store of value. And so that's kind of the way that I view these things. But look, ultimately, both sides of the aisle are working hard to advance Bitcoin adoption in their own right. And so this is a it's infighting, sure, but it's productive infighting, right? Because the people on the medium of exchange side, the Michael Saylors of the world, the store of value side, they're working hard in order to make sure that more people can use Bitcoin and use it as a store of value, right? With Strategy's suite of preferred stock instruments, it's now accumulated this massive balance sheet of 649,000 Bitcoin and some change. Whereas Jack Dorsey just unveiled like the most bullish news, I think, in Bitcoin's history as far as a medium of exchange is concerned. You can go to any Square point of sale terminal, even if they don't know about Bitcoin, and you could pay in Bitcoin. You may have to give them a couple of instructions as to what to do, but you can pay in Bitcoin at any Square terminal. And so both of these things are massively bullish for Bitcoin. So regardless of how Bitcoin is viewed, it can do both things at the same time. As far as priorities are concerned, in the West, the chief problem that people are facing is that of a store of value. So that is how Bitcoin is treated in the moment. There may come a day where the medium of exchange is needed from a value proposition perspective more than a store of value. But for now, that day hasn't come. At the very least, though, the groundwork is being laid. So should Bitcoin should Bitcoin's chief function sort of migrate, I suppose you could say, to that of a medium of exchange, then we'll have the infrastructure ready to go for it because the largest point of sale provider in the United States has now enabled Bitcoin payments. So I think both of these warring narratives are both very good for Bitcoin, but I think in the United States, at least for now, the reality is that a store of value is the most pertinent problem facing the most people, and that's what Bitcoin solves.
Yeah, I think what's really interesting and ultimately just makes me even more bullish is that whichever, like, we talk about sides or camps, but just for lack of better words, right? But ultimately, we're still talking about Bitcoiners who want what's best for Bitcoin. You pointed that out very correctly. Like Michael Saylor and Jack Dorsey are two people that are more invested, literally and figuratively, in Bitcoin than any other people, right? Just on a personal, on a corporate basis, like wow, they leave the rest of us in the dust. But what I think is fascinating is that ultimately, no matter which way you're approaching Bitcoin, whichever way you're first introduced to Bitcoin, whether it be using this as a store of value and just hodling, right, which is using Bitcoin, all right, or using Bitcoin as a medium of exchange, transacting in Bitcoin, both paths ultimately lead to the other. If you start with store of value and more and more of your wealth is in Bitcoin, you end up finding ways to use Bitcoin as a medium of exchange because, well, you're very short fiat, right? You just need to be transacting in Bitcoin at a certain time for certain things after your percentage of ownership gets up to a certain level. So you transition from the store of value to also using it as a medium of exchange. Same thing on the medium of exchange side. You start out that way. And, especially for these merchants, what I think is going to be incredibly beneficial for a lot of them is they start accepting Bitcoin as a medium of exchange, and then they start hodling Bitcoin. As a store of value, just as a function of that, they start paying more attention to Bitcoin. We all know once you start paying attention to Bitcoin, you start watching its fiat price, you can't help yourself, and you see it grow and grow year after year. We have a great example of this in Steak and Shake, which I think was again just this super bullish announcement. I bought Bitcoin burgers and Frisco melts and shakes at Steak and Shake multiple times, enjoyed their tallow fries. And it's great to be able to spend Bitcoin there. They've also started now keeping that Bitcoin that they're receiving as their own little strategic reserve. So I think I'm very bullish just on general, whether it be mom and pop or larger nationwide chains like that, like Steak and Shake, realizing that, wow, Bitcoin is something that not only can bring a ton of new people to my business because Bitcoiners love supporting Bitcoin, pro Bitcoin businesses, but also, wow, this is something that, can help my balance sheet, whether it doesn't matter what size business I am, from the individual to the corporation to the nation state, the personal, the corporate, or the government's balance sheet. Bitcoin helps, right? And even just a little bit of Bitcoin, a little bit of that exposure helps tremendously. And I think we're seeing more of a realization of that. I don't know about you. I'd love to know, was there any Bitcoin talk at your Thanksgiving dinner? Can I ask?
Well, I had a relatively small Thanksgiving dinner, and so there absolutely was Bitcoin talk. It's
Okay.
funny you mention that. The only two people in my life that I've been able to successfully orange pill, at least personally, like I hope and pray that the content that I've produced has orange pilled a whole bunch of people. I hope that it has. Otherwise, what am I doing? But in my own personal life, the two people that I've been able to orange pill personally are my wife and my mother, right? And so Bitcoin has this transformative impact. My mother is now getting up there toward retirement age, and she's seeing that Bitcoin is putting in a whole lot more work than the other assets she's holding in her portfolio. In the same way, I'm recently married. We're looking to have children soon. The Bitcoin that I'm buying today for my future son or daughter will have this enormous impact on their life moving forward, right? College may have been out of reach if they wanted to, if I had been saving in anything else for their college fund, but because of Bitcoin's historical outperformance relative to other assets, it'll be much further in reach. And so Bitcoin has a different value proposition for different people at different stages of life, right? And the more people that hold it, right, the more people that will inevitably use it, right? I one of the major points that I have a lot of contention with that you brought up is that just holding Bitcoin and quote unquote hoarding it is not using it. But Bitcoin has, over the last 5 years, has had a compound annual growth rate of over 40%, right? And we're near this 36% drawdown, so that's still quite good, right? An asset that is now 36% down from its all-time high, still having outperformed most of the other assets in the market over the last 5 years. That is a good use for an asset, right? Saving value for the future. I think a lot, fiat money has kind of distorted our brains in that, the Peter Schiff argument of looking at Bitcoin and saying, well, what do you use it for? Storing value into the future. It's the most important thing. And oftentimes people will, like the Bitcoin detractors will cite gold's other uses. They'll cite its uses in semiconductors and manufacturing equipment and all this other stuff. But the reality is that makes up a fraction of a fraction of a fraction of gold's actual monetary value. Its chief monetary value is what gold is used for, which is to store value. So, I tend to think that over time, exactly as you said, as more people hold Bitcoin in order to store value into the future, and they increasingly do so because they see its outperformance relative to other assets in their portfolio, they will begin using it, right? And you have companies that are building for that utility today, right? Square, bringing Bitcoin payments to all of these point of sale terminals. As more people hold Bitcoin, there will be new and unique needs in order to use that without having to convert it back into fiat. And over time, right, we're talking, 5, 10, 30, 50 years, these multi-year, multi-decade time horizons, Bitcoin's utility will only increase, right? But the thing that brings most people into it in the Western world is a store of value, particularly because of how widely available it is, right? Not a lot of people may know how to open up a brokerage account and begin allocating to, passively to an index fund, but it's extremely easy to fire up a mobile wallet and have a friend send you some Bitcoin, right? It's extremely easy to do that. And so the barrier to entry for Bitcoin, in my mind, is much lower. And as a result, it's going to be the most popular new store of value for people who aren't yet thinking about this problem. So that's kind of the way that I view all of these developments. I think once people understand the problem and they really grok it, which is quite a simple problem to grasp, which is that they keep inflating away your wealth, Bitcoin just becomes an extremely easy solution to that problem that everybody's facing.
I want to ask you too, because you mentioned Bitcoin's compound annual growth rate over the past several years, even with this drawdown being somewhere in the 40% range, which may not sound like much, but the whole point is that it's compounding every single year. Like this, when you start looking at the numbers, and I think this is a lot of like the models that Michael Saylor put out, it starts getting just the baseline case starts looking insane if these trends continue. Right? I'm very curious. We talked earlier about the fact that perhaps Bitcoin will have dampened downside volatility just because of this structural bid. Do you think that there's also a lot of dampened upside volatility? Do we start to see a shrinking of the compound annual growth rate? It starts being harder and harder to see those truly outsized returns? Or, because when I look at this, I say, okay, that makes sense. But at the same time, I don't foresee what asset is over the long term is going to outperform Bitcoin. And we're certainly going to get some assets, obviously, NVIDIA, Tesla, these companies that have performed exceptionally well, even relative to Bitcoin, have performed pretty darn well over various timeframes. Where are you at with this in terms of what does that upside volatility look like on a compound annual growth rate basis? Do we still have, can it maintain at what it's been? Or do we start to see those kind of diminishing returns to the upside, but there's also diminishing downside volatility as well? How are you thinking about this?
For sure. I mean, I think about this in a number of ways, right? I cite the tweet that I made earlier, Bitcoin being like a $100 trillion asset. To me, that's conservative. There's an immense monetary premium in other assets all around the world, like real estate chief among them, which is why we built Horizon. And so I think that Bitcoin hasn't nearly reached the level of adoption that it will reach one day. A $2 trillion asset, I think its total addressable market is closer to like 50 or 60% of all the monetary wealth in the world. And the tools don't yet exist in order to absorb that wealth, but they're being created by the day. We're doing our part with the real estate market. Saylor is doing his part with the fixed income market. I tend to think that over time, and the reason I say this, is because over time, Bitcoin will have a diminishing marginal return to the upside. And that's because it's much harder to move a something trillion dollar asset. I think it's actually $1.9 trillion because we're not quite at $100,000 right now. But regardless, a $2 trillion asset, it's much harder to move a $2 trillion asset than it is to move a $200 billion asset, right? The exact same amount of capital that could flow into Bitcoin when it was $200 billion and move the price by 10%, today moves the price by 1%, right? And so it's going to be harder to move it to the upside. That said, you have assets like NVIDIA that have a supply schedule that is theoretically infinite, right? Companies can issue shares into infinity, but Bitcoin's supply schedule cannot be changed. And Nick Botzi put it this is something that I learned from him and something that we had spoken about in my time at the Bitcoin layer working with him. But he told me, and he essentially said that Satoshi kind of broke all economic models because Bitcoin has no supply response to changes in price, right? Every other asset does. When NVIDIA has a massive boom in its stock, it issues more shares of stock. It does a 10-for-1 stock split. It already did that last year. When gold's price rips like it did this year, you're going to see a lot of new gold miners come online, gold miners purchasing new and more efficient equipment. They're going to increase the supply schedule, the amount of new gold coming online in order to meet this massive, huge, this massive increase in price, and that will naturally dampen price. Bitcoin is the only asset in the world that does not have a supply response function to changes in its price. If Bitcoin is $150,000 tomorrow, Bitcoin miners can't come online and change the rules of Bitcoin, so they're issuing 10 Bitcoin every 10 minutes instead of 3.125. That stays fixed forever. And so even though we are going to see these diminishing marginal returns as Bitcoin continues rising, I still think we're going to average 20 to 40% per year over 5-year, 10-year, 15-year timeframes, purely because the demand side is totally infinite, right? Because the amount of dollars being printed into existence never stops. Nothing stops this train, as Lyn Alden says. Whereas every other monetary asset that could absorb some of that, the central entity that governs that, whether that's a board of governors, whether that is gold miners working in their own individual right, they have the ability to increase the amount of supply that comes online. So I think both of those things are true at the same time. I don't think because Bitcoin will have these diminishing marginal returns, its upside is capped. I think its upside is infinite because the denominator will never stop being debased. And so I think looking forward, Bitcoin's compound annual growth rate, if I'm just looking on my screen here, over the last 10 years has been 74%. Over the last 5 years has been 37%. If we were still at $126,000, it would look more like Bitcoin's 10-year compound annual growth rate was like over 100%. Its 5-year compound annual growth rate was over 50%. But I do believe that Bitcoin will outperform basically everything else purely because of the supply side. You cannot issue new Bitcoin in response to a change in its price. And that's the fundamental thing that breaks every single economic model.
Well said. And I think one thing that really can't be discounted right now is the complete shift in tone when it comes to political leadership and their views of Bitcoin.
Mm-hmm.
We went from a very hostile environment to now I would say, overly permissive environment as it relates to Bitcoin and all the other coins that shall not be named. But it's quite a paradigm shift, and I want to talk a little bit about that change at the, let's say, political level. Of course, Bitcoin doesn't care about politicians, but politicians should care about Bitcoin. But I think we have a really interesting dynamic at play. I want to kind of dive into that a little bit and also just talk maybe about how we see the regulatory side evolving. There have been a lot of interesting new proposals right now. Warren Davidson just had one fairly recently here. Obviously, Senator Cynthia Lummis has been incredibly vocal and pro-Bitcoin. We're still, the SBR, there's not been any active buys for this, but there have been more confiscations. Does that create a perverse incentive? Well, that remains to be seen, but it's certainly something we should think about. Let's dive into that. But first, I do have to take us to a very quick commercial break, and then we will be right back with more talk about Bitcoin and the intersection with the political. Stay tuned.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin,
It's not just a cat, he's family.
quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. My name is Walker America. I am here with Joe Consorti. He's the head of growth at Horizon. We've been talking all things Bitcoin here today. One of the things we haven't taken a dive into yet, though, is Bitcoin's intersection with the political. And I think this is a very relevant topic, given some of the recent news that we've had come out. The folks at the Bitcoin Policy Institute are doing tireless work, often thankless work, to try and orange pill the swamp in DC. And there's actually some traction that is happening. They obviously, earlier in Trump's presidency, there was the executive order around the strategic Bitcoin reserve. That was a lot of that language was directly attributable to BPI, which is fantastic. But more recently here, I think as of November 20th, BPI officially backed Representative Warren Davidson's newly introduced bill, HR 6180, which basically codifies the SBR, for one, and then allows voluntary federal tax payments in Bitcoin without triggering capital gains taxes. This is obviously something that's very new. I think this is a really interesting development because we mentioned just before the break here, perhaps some of the perverse incentive that is created by having the one of the only ways that the U.S. is currently adding to its SPR being through confiscated proceeds of criminal operations, things like that. This creates sort of a new paradigm. If an OG whale wants to pay some taxes in Bitcoin, they can do so without triggering capital gains, which is kind of common sense, I guess. I don't know how I feel about sending my hard-earned sats to the government, but I'd love to get your take on this. Positive development, indifferent. How do you see this?
Hugely positive development, right? Anything that can happen that would not trigger a capital gains tax on Bitcoin is hugely positive, right? The other development that I'm looking at is a de minimis tax exemption for Bitcoin. Any payments made under $600, that's going to massively increase Bitcoin adoption, right? One of the main sticking points that people may have with using Bitcoin in their day-to-day life, or just buying Bitcoin and then using it as their everyday tool, is that every time they spend it, right, chances are they're going to get hit with a capital gains tax of some sort. And so those two things in tandem, being able to pay your taxes and the de minimis capital gains tax exemption, those would be massive for Bitcoin adoption, right? This is a world where you could pay your utility bills in Bitcoin. You can go down the street, pay for a coffee in Bitcoin without having to worry about capital gains tax. And it would be a hugely positive development if we could start funding the SBR with something that isn't confiscated Bitcoin. We've almost doubled the size of the strategic Bitcoin reserve, which is really great. But the downside is that we've done that with stolen Bitcoin, right? That belongs to other people who were scammed out of their Bitcoin in the Chinese pig farming operation. That's not going back to them instead, which would be obviously extremely difficult to do. But instead of trying to give it back to them, we're holding it in our SBR. This would be a much more constructive way of actually funding the thing. So both of these are really massive developments. I think the bigger picture here, though, is that we've shifted from this extreme and explicit regulatory hostility under Biden and Gary Gensler and those other folks to this massive strategic embrace under Trump. Obviously, that has come with a couple of downsides, World Liberty Fine, all of these other tokens that were released, but massive upsides, right? The strategic Bitcoin reserve becoming a thing, the Bitcoin for America Act from Warren Davidson seeking to codify that into law. Anyway, the biggest transition for me is that we've gone from a Treasury Secretary who hated Bitcoin, who is outwardly and avowedly skeptical of it, to Scott Bessent. Janet Yellen obviously oversaw loads of crypto skeptical policies, warning about market risks and strict oversight everywhere she turned, to Scott Bessent, who's been an avowedly pro-Bitcoin advocate. He's talked about supporting U.S. Bitcoin accumulation, U.S. Bitcoin-based businesses. He was literally at the launch of PubKey in D.C. last week, which is insane. Seeing the sitting Treasury Secretary at the launch of a Bitcoin bar 7 days ago, that tells you everything you need to know about Washington's perspective on Bitcoin. And for me, these are all major developments, right? The more Bitcoin can get brought into the regulatory Overton window, the better, right? Ultimately, it's going to foster even more development. It's going to foster even more adoption here stateside. So these, in my mind, are just hugely bullish developments compared to where we were just a couple of years ago.
Yeah, I mean, it's certainly, I'm in agreement with you that the more this gets widened, or the more that the Overton window around Bitcoin is blown wide open, that's a good thing. Because of course, now again, Bitcoin doesn't need politicians. Politicians need Bitcoin. They're going to realize that. We saw this in the last election. I think Bitcoiners played a meaningful role in helping get Trump elected. Those that undecided, that independent libertarian vote. Obviously, not every libertarian is a Bitcoiner, and vice versa, but that certainly played a role. I think now, what I would still love to see is, we've at the same time we've seen some of these horrible open source developer cases still move forward. The Samurai dev case, right? Seen Tornado Cash, Bitcoin Fog, Ian Freeman, a bunch of different cases here where I think the Trump administration has an opportunity to really set the tone, much as Donald Trump did by pardoning a full presidential pardon, not just a commutation of the sentence for Ross Ulbricht, who just spent his first Thanksgiving at home with his family in many years, which is incredible to see. And so I'd like to see more of a push on that front as well. I know there's a lot of people advocating very hard for these pardons, because if America, in my mind, wants to be a place that is truly going to be the Bitcoin capital of the world, or the quote crypto capital of the world, either way, you need to make sure it's a place that is hospitable and where to open source development, and where open source developers are protected and not treated with the same archaic laws, smacked on the hand with an outdated book of rules that frankly just don't apply to people who are writing non-custodial software, right? And open source Bitcoin software. So I'd love to see the change there, but certainly the developments have been heartening. What I'm curious your perspective on as well is this administration is very pro Bitcoin and pro quote crypto as well, extremely pro crypto as in certain ways, maybe a little bit too much. Get back to a little bit more pro Bitcoin, but what is I think a little bit worrisome is the pendulum swings back, right? This is in the American duopoly, the Coca-Cola, Pepsi-Cola duopoly here. You can choose one or the other, but it tends to swing back pretty hard. How important do you think are getting some of these things actually codified into law versus an executive order can be flipped around with the next administration? The next administration may decide to be overtly hostile to Bitcoin again. Do you think that's the likely case, or do you think now that the situation has changed enough, the Overton window has been blown wide enough, the information available is deep enough that maybe regardless of who's in power, Bitcoin won't be used as some weird partisan football? Or do you think we're just going to be right back at that again if we get another another Democratic administration? How are you looking at that?
I tend to believe that it's the former, right? I think that Bitcoin is now here to stay. It's moved beyond, it's crossed the Rubicon, if you will. It's now a bipartisan issue. Even though Bitcoin was a major component of what got Trump elected, it brought over a lot of the libertarians who were sitting on the fence and were ready to potentially throw away their vote to come and vote for Trump. I do think that now, because you're seeing a lot of Democrat representatives who have come over and crossed to the other side of the aisle, who have voted for some of these things, who have voted for the pro-Bitcoin legislation that has gone through the House. And so now I think that it's kind of a hugely losing position to be, kind of on the Elizabeth Warren side of things, right? The old guard, where you attack Bitcoin, you attack crypto broadly, crypto quotation marks broadly. But we're all here for Bitcoin, right? It's the only asset that has any staying power. It's a hugely losing position now. I don't think the Elizabeth Warrens of the world are going to run on a anti-Bitcoin platform anymore. It's a bipartisan issue. So unlike other political things, I don't think this is going to be a football that gets tossed around. And we're going to have 4 years of a anti-Bitcoin administration followed by 4 years of a pro-Bitcoin administration, and back and forth and back and forth. And that's because for young people, particularly Gen Z, Bitcoin is such an important aspect to their life, right? They're viewing this as the one way, the most surefire method that they can use to get ahead in a world where they're increasingly behind. So I do not believe that it's going to get that we're going to see, even if JD Vance doesn't get elected in 2028, which I for one am hoping that he does. I don't think that we're going to start to see a slew of anti-Bitcoin legislation. It may be pared back somewhat, but I don't think we're going to move in the opposite direction. And so that's why, as you mentioned, it's so important that we don't just get executive orders for these things, but we actually see action in the House to codify these things into law and pass formal legislation about them. Otherwise, they can just get repealed. We saw, Trump come in, and I think it was a record number of executive orders within his first month, like 1,000+ executive orders that he issued. Those can all get overturned, right, by the prior administration, by the next administration, if it isn't JD Vance or another Republican in that seat. So it's extremely important. And on the Samurai Wallet issue and all of these Bitcoin developers who are now getting arrested, I think it's extremely important that you have consistency. Otherwise, you're kind of seen by both sides of the aisle who are pro-Bitcoin as someone who isn't really putting their money where their mouth is, right? CZ got a full presidential pardon. And so the onus is on Trump and the people who are advising him and speaking in his ear to give a pardon to these other folks as well. It's wonderful that Ross got pardoned. That was a 10-year-long effort in order to get that done. But these other folks who are now imprisoned for extremely lengthy sentences for doing nothing other than coding things, the exact same principle, the exact same thing needs to be extended to them, right? The precedent has been set with Ross. It's been further set with CZ. And now these people who have been arrested for simply coding things need to receive that exact same level of presidential pardon as well. I think we need consistency and we need codification. Those are the two C's that I think we need as far as Bitcoin is concerned in DC in order to showcase to the Bitcoin voter, the person who may be voting on good Bitcoin policy versus bad Bitcoin policy, that the current administration and the current party, the Republican Party, is the more pro-Bitcoin party. I believe that Bitcoin, like housing, is increasingly becoming a politically protected asset class, in that we're not going to elect you. You're not going to be elected if you don't protect this increasingly popular store of value asset.
Yeah, I think you're correct there, and I hope to see, especially you mentioned the younger generation, the Gen Z, who, boy, there's a lot of reasons for them to be nihilistic, but there's a couple of great reasons for them to be very hopeful as well. Bitcoin is, I think, predominantly the one there, but it comes down to adoption, right? I think you're seeing, we talked about that pendulum swinging, right? You tend to see during these types of periods, you can see why these younger folks would be tempted with the totalitarian temptation, right? The movement towards more communist party lines, and that is, I think, the last thing that we want. We've seen some of this start already. The New York mayoral election is one example of this. We'll see how their communist utopia plays out in New York City. I think we all know the ways that goes when the government starts fixing the prices of everything, including the price of money. But the central banks are already fixing the price of money. So I guess real capitalism has not yet been tried here where we are. Just as long as central banks stay active in that role. Speaking of central banks, I did want to discuss with you a little bit. Central banks have obviously been accumulating gold in kind of record numbers, or at least testifying that they have this gold. Now, whether or not that gold is really there, I don't know how much gold we actually have at Fort Knox. I don't know how much gold China really has, because there's no way to verify it every 10 minutes like there is with Bitcoin. But okay, presuming they have what they say they have, and you also have companies like Tether, who I think was just recently revealed had bought a shocking amount of gold just very recently. They've been adding a lot. They obviously own a lot of Bitcoin. They also own a lot of U.S. treasuries. I think they're quickly becoming just a true powerhouse, equivalent to a nation state level, certainly bigger than many nation states already. But do you think that these moves by central banks to accumulate Bitcoin are just a bit of foreshadowing for what they're going to start doing, or accumulating gold are foreshadowing what they're going to start doing with Bitcoin? Meaning we already see the Czech central bank trying out a very modest Bitcoin purchase, like $1 million worth of Bitcoin. Does that trend accelerate for central banks? Obviously, central banks have viewed Bitcoin disparagingly. Christine Lagarde, for example, at the ECB, has not been any big fan of it. Then you've got Chair Powell, who is actually not clearly a big fan of Bitcoin, but has also said things like, well, you can think of Bitcoin like gold. It's digital gold, which is wow, okay, he's saying the same thing that a lot of Bitcoiners say. Do you think we start to see at all of a bit of a scramble by central banks when they realize that has the starting gun already been sent off in this race, or do we have a long ways to go before we see central banks adopting Bitcoin accumulation policies similar to their current policies around accumulating gold?
Very good point. I think the starting gun has been fired off, because the recognition that nothing stops this train and that fiat money is on a race to the bottom is now more widely recognized than ever. Never before have you seen major American banks, JP Morgan, Morgan Stanley, Citibank, Goldman Sachs, among others, all call out the debasement trade by name. The debasement trade being investors increasingly looking to accumulate hard assets in order to offset the impact of monetary debasement. Never before have you seen that, but also you haven't seen them bundle Bitcoin in with gold in that discussion. All four of those banks that I just mentioned called Bitcoin digital gold. Jerome Powell also called Bitcoin digital gold. And so this is, it's something that hasn't been reflected in market pricing, right? Bitcoin, it trades right alongside the NASDAQ. It doesn't have correlations to gold. It's kind of a unique asset in that way, in that obviously it is beholden to the direction of global liquidity, the direction of global balance sheet capacity, but it's also tightly correlated to the NASDAQ. And so it's kind of straddling both of these worlds, but it's a major development when you have banks likening Bitcoin to digital gold. And I think this is a trend that's only going to continue. You cited the Czech National Bank. They bought a very, very small amount of Bitcoin, $1 million worth of Bitcoin in what they're calling a test portfolio. And I think this is just one example of several major examples that you will start to see. I think the United States, despite how pro-Bitcoin we are, I don't think you're going to see any asset purchases from the Fed themselves for Bitcoin. Obviously, the Strategic Bitcoin Reserve is a function of the U.S. government, not the Federal Reserve. They're supposed to be separate. They're not quite separate. So you could almost in a way say that the United States Fed has begun accumulating Bitcoin, but we haven't. And so I think in Europe, where the fiat problem is much worse, where the problems that we have with the US dollar are 10 times, 100 times worse in other countries where they don't have necessarily as strong of a holder base for their fiat currencies. That's why you're starting to see Bitcoin accumulation from those players before you see it, from major Western countries. And so I think, I've said this a couple of times before, but I think you're going to see the first G10, G20 country purchase Bitcoin for their balance sheet. The central bank do it within the next 5 years. Not just a reserve that's composed of, coins that were taken from criminal enterprises in the United States. I think what you're seeing in the Czech Republic now is kind of setting the bar for what other central banks will do, who have a much worse debt problem than we do, right? The United States still is the beneficiary of, being the world's reserve currency. People still buy massive amounts of U.S. treasuries, maybe not you and I, because we understand the problem. But I think at some stage, due to lack of demand, most European countries are going to come on board with purchasing small amounts of Bitcoin in order to keep their currencies alive. And that's probably going to be a trend that you see with the U.S. Federal Reserve, I'd say within the next 20 to 30 years. It's a much longer time frame for the more developed Western countries whose fiat is more in demand. But it's a trend that you've now seen the proverbial starting gun go off for in Europe. And I'd say the timeline is probably more extended for the G10, G20 countries to get on board with this as well. Talking about gold specifically, I think that Tether purchasing a lot of gold is really it's a testament to where we are in the world. Sam Callahan put out a great post showing that Tether bought more gold last quarter than every other central bank, 26 tons worth of gold. And it's kind of showing where we're moving, in terms of the US dollar nationwide, right? Obviously, Tether holds US treasuries in order to keep its main stablecoin USDT backed 1-to-1 with the US dollar. But they're also, on the flip side of that, using the profits that they receive to invest in hard assets, those being gold and Bitcoin. And this sort of Tether model, if you will, is going to be one that I think is adopted by every major American central bank. Think of it this way. Tether is, from a per employee basis, they are the most profitable company on a per employee basis in the world. And so central banks who are trying to future-proof themselves will probably adopt the Tether model, right? You need to look at the most profitable company. Effectively, what Tether has done is they've turned themselves into sort of like the euro dollar equivalent of 2025. They're this offshore central bank-esque entity that is issuing these shadow dollars, if you will, in order to satisfy dollar demand on rails that are not satisfied by the traditional banking system, that being rails that take you into Bitcoin and unfortunately, other digital assets. And I tend to think that smaller central banks will follow suit, and on a long enough time horizon, 10, 20, 30 years, major G20 countries will follow suit as well. So all that is to say, I do believe the starting gun has fired, and Tether is kind of laying out the foundation of a plan that these smaller central banks will adopt, and then eventually, over time, will be adopted by other major central banks as well, which is not just buying your nation's treasuries, but also buying hard assets to hedge against currency debasement.
Yeah, I think another very interesting sort of case study here happening right in front of us is El Salvador, right? You've got a dollarized nation, and there are many nations around the world that do not have the exorbitant privilege of printing their own fiat currency. They are either using dollars, or, as 14 nations in Africa using the CFA franc. Many other cases such as this, and I think pushes for some countries with very bad fiat currencies to dollarize or to euroize, more pushes to dollarize, let's say. But I'm wondering if we start to see if these become the first movers. El Salvador already is from that perspective, right? They've already sort of set the tone there. Again, I think they hold something around maybe 8,000 Bitcoin, give or take. It's quite a large number. Sure, it's not much compared to MicroStrategy, for example, but they're on their way, and they're certainly been accumulating more Bitcoin than other governments, which is how they should be benchmarked against. Do you think we start to see more of a push for, let's say, the Bitcoinization of the national balance sheet in countries where they don't have the privilege of printing their own fiat currency out of thin air?
Absolutely. Yeah. Countries that don't have a fiat currency of their own, I think they're going to move more in the direction of the El Salvador model. Not only from a monetary perspective, but also what they've done as far as general governance is concerned. I think what El Salvador proved to the world is that you can fix crime by locking criminals up and throwing away the key. And so I tend to think that smaller countries, war-torn nations where this is more of a problem, are going to elect leaders that follow the Nayib Bukele model. That said, on the other side of the coin, you do see the rise of socialism as well, right? New York City, the largest American city, or one of the largest American. I don't know if Los Angeles or New York has a higher population. I think they're neck and neck. But either way, that major American metropolis electing a socialist, right? And this kind of boils down to the financial nihilism that's being felt by young people today. We're either going to move in a direction of socialism in order to fix this problem, this angst that people are feeling about their way of life, or we're going to move in a direction of hard money, hard work, capitalism, locking up criminals, etc. Those are the two paths that we're diverging into. And so I think that smaller nations would be right to adopt the Nayib Bukele model of stacking their faces off, taking IMF loans to buy Bitcoin, etc. They did this massive smash buy of, I think, over 1,000 Bitcoins, something like 1,100 Bitcoin, and their total holdings are 7,500 now. The proof is in the pudding for what it's done for them from a balance sheet perspective. Over time, I don't know how much they're up on their position, but it's to the tune of hundreds of millions, if not billions of dollars. And it's just a model that has proven itself out. And I think for those countries that don't have the exorbitant privilege of being able to print fiat liabilities in order to pay down their debts, Bitcoin is going to be a solution that they adopt for sure.
Yeah, El Salvador is quite an interesting example for a lot of things, as you mentioned, also for violent crime. I mean, this was the most dangerous country, basically one of the most dangerous countries in the world, completely run by gangs. And there was this recent horrific story that we saw in Chicago, where a young woman was set on fire by a man on the metro line in Chicago. And the mayor, Brandon Johnson, basically said, you cannot incarcerate your way out of violence. It's racist, making these sorts of claims. Nayib Bukele, President Bukele, retweeted that with a quote tweet, basically showing the charts that are breaking down exactly the fact that, no, that's incorrect. You can incarcerate your way out of violence. He said, you can literally incarcerate your way out of violence. That's precisely why incarceration exists in the first place. And I think this is just part of this larger dynamic around the world that I'm sort of tracking, where we have divergent realities. We have divergent realities and divergent incentive models. And ultimately, it's a question of which one of these incentive models and realities is going to emerge victorious. You have ultimately the constant battle, which is, more communist tendencies versus more capitalist tendencies, more, let's say, permissive attitudes towards what sort of behavior should be tolerated when that behavior is infringing on the private property, the human bodies of other people. Like, that's in my mind, the most basic function of government is to enforce the law. The most basic function of the law is to organize for the collective defense of private property. Private property starts with your body. Like, it is about keeping people safe from violence, from plunderers. When we let the plunderers run free and when the government themselves become the plunderers, we get into a lot of issues. Joe, do you still have a couple minutes left? Can you stay a little bit more after this next break, or do you need to hit the road? Okay,
let's do it.
We're gonna hit one more commercial break, and then to take a little bit of a clean break here, and then come back, because I do want to talk about this, kind of zooming out here to look at just the larger picture of this. I think Bitcoin is the heartbeat amongst a lot of these, a lot of the things that we talk about on a daily basis as Bitcoiners, right? But ultimately, this comes down to incentives. And I think when you have broken money, you have broken incentives, and we're seeing the results of those broken incentives play out in real time all around us. The question is, what are people going to do about it? Let's talk about it next. First, we're going to go to a very quick commercial break. Don't touch that dial. We will be right back.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. I am your host, Walker America. I am here with Joe Consorti. He's the head of growth at Horizon. We've explored a number of different topics today, and we're going to be with you for just a little bit longer. We've talked about everything from J.P. Morgan, who is, of course, one of Jeffrey Epstein's favorite places to launder his money before he disappeared himself, to the debanking of Jack Mallers by that very same institution, to the intersection of the political and the economic with Bitcoin. I think one of the things that we're now naturally coming to the point of discussion here is the intersection of, let's say, the cultural with Bitcoin. And I mean cultural in a very broad sense. I mean it based on the types of values that societies hold, what drives those values, and what really drives the incentives that we all operate under. I think, Joe, that we're reaching this point where obviously the world is changing fast. There's a lot of talk about the unipolar moving towards the multipolar world. There's let's say massive cultural clashes, I think, happening in a lot of nations, driven by the policies instituted by government, driven by whether it be basically allowing their borders to be completely overrun. And of course, I'm an American. I think that this country would not be here without immigrants. But obviously, there's a line somewhere, right? And I think if you talk to anybody who immigrated to America, I was lucky enough to be born here. You talk to anybody who immigrated, and they will tell you that they did it the right way and they took the time. And this is not just an American issue; this is an issue all around the world. And I think that you have this sort of fracturing of the social contract, so to speak. I'm curious, just Bitcoiners say a lot, Bitcoin fixes this, right? Fix the money, fix the world. Do you think that that's actually realistic? Or do you think that there are some things that fixing the money just won't fix? It feels like we grow ever more divided, but where are you at with this? Because I go back and forth on it sometimes, ranging from extreme optimism to let's say cautious nihilism at times. But where are you at with this?
Absolutely. I think Bitcoin is a tool. And I think it's a tool that reframes our perspective on a lot of things and helps us to zoom out and, value things a little bit differently, right? When you purchase Bitcoin, when you hold it for the long run, and even if it's the denominator of your life, you recognize that value should be accrued over a very long time frame, right? You should be planning for your life 15, 20, 30 years in the future. And I think one of the things that we've seen in this country is that it's become increasingly difficult to do that. Bitcoin can be a tool in order to achieve those ends that you seek to achieve, whether that's homeownership, marriage, starting a family, etc. But it can't necessarily fix all of those things in a vacuum if you have a government that's actively working against you. And so I think that that has a lot to do with the huge rise in populism and nationalism over the last 4 years in particular. You saw the first rumblings of it with Trump's first administration. You had 4 years of Biden, and that divergence between populism and communism and kind of, working for the world versus working for your nation and your neighbor, those things diverged even further. Populism went out in 2024, but it's not necessarily something that can be here forever. It's something that has to be fostered. But nevertheless, the global moment right now is kind of this shift toward deglobalization, this prioritization at the individual level of prioritizing first yourself, then your family, then your region, then your state, then your country, and then the world writ large. Versus the opposite end of the spectrum, which is for the last 20, 30 years, prioritizing the world writ large. And what we've seen is that we've hollowed out our industrial base, we've shipped jobs overseas, and a lot of the incentive programs you have in the United States today deprioritize American workers, right, at the behest of people who are coming here and not necessarily providing that value, if you will. A really important piece that I saw, and so to kind of answer this question, I think Bitcoin is a tool, but it doesn't necessarily fix all of these problems that young people are facing, namely mass migration, which is one of the things that a huge hot button issue in this election, one of the main reasons that Trump got elected. So I don't think it necessarily fixes these things, but it's a tool that can allow people to reframe their perspective in order to prioritize those things even more, right? And so that's kind of the global moment that we're in, right? That's how I view all of these things. And so, we talked before the break about Brandon Johnson saying an extremely stupid thing, which is that, you can't incarcerate your way out of crime. And I just take so much issue with that, because if you put criminals away and you don't release them, then they cannot commit crime. It's such an obvious thing. But, we've kind of lived through 2 decades of being told that that's not the right way to do things, and much to the detriment of society as a whole, right? Irina Zarutska, prime example, murdered on a train in Charlotte by a guy who had, I think, 15 prior felony convictions, but was released back out on the street. Another instance in Chicago, a woman burned alive on the subway by another gentleman who was a repeat offender. And you also saw this in New York. I think it was last year, a woman who was immolated by someone on the subway who, again, came into this country illegally and had multiple prior convictions. And so for me, I think it's just an absolute no-brainer that this way of governance we've been living through, the catch and release of violent criminals, is just no way to live. I think Bitcoin plays a role in reframing people's perspectives and being more of a realist. And I think it is a tool that can allow people to have financial optimism about the future. But as far as governance goes, we're shifting more toward governance that prioritizes the safety of the people above all else, which is a hugely important shift. Yeah, that's kind of what I will say. That I don't think that, we can kind of sit on our hands and say, well, I'm going to buy Bitcoin and the world is going to be fixed. People need to be vocal about these issues. They need to, and they need to vote like their life depends on it, because in a very real sense, it very much does.
I think there's also one thing that's heartening is to see that I've seen among Bitcoiners is a movement towards more of a focus on localism. You mentioned kind of this bottom-up approach, right? To focus on your family, getting your own house in order, then focus on your community, focus on your city, focus on your state. And that's one of the things that's how the US was supposed to be, right? I think that not only in the US, but around the world, centralized governments have gotten bloated and giant, just absolutely gigantic to the point of absurdity, right? And this is one of the things where I think a lot of that does stem back to the money. There are obviously other causes as well, but the fact that you're able to just, the fact that nothing stops this train is going to be the economic meme of the decade, perhaps the century, that you have to keep funding this bloated beast. And the only way to fund that bloated beast is by printing currency out of thin air, right? And when you have that power, it's going to be used. We've seen it used, and we've seen all these, countries around the world, but to speak of America specifically, which I think is, though it may have that fault that it shares with many other countries, it's still, in my humble and biased opinion, the greatest country in the world, right? I'm very proud to be an American. I'm very lucky that I was born here. But our government is just too damn big, Joe. And I think that the only way that we may affect any meaningful change with that, I think that it has to start with action at the local level, right? That's the thing you can actually affect change at. There's so much gridlock in Washington. We know that nothing stops this train. We know that in order to keep funding this bloated government, they have to keep printing more money. And I hear you on the the voting side of things, but at the same time, it's like the problem with that is that also that may fix some problems, right? Like, yes, Kamala Harris and Donald Trump would be very, very different, right? Undoubtedly. But the one thing that every darn politician seems to share at the national level is they're going to print more money, even though the Federal Reserve is different, So it's one of those things where I feel like a lot of it does come down to acting at a local level, being able to affect change where you can, because this multi-head hydra that we have in Washington, it's like it just, you cut one head off, two grow in its place, and both heads are spewing money created out of thin air. I don't know.
Yeah. No, very well said. I think, and this is a post that I think someone made this post, and I totally agree with it on X, is that like state and local government, as more people have prioritized getting into jobs, like going and becoming a doctor, lawyer, engineer, going into business, whatever, jobs in local government at the state and local level have been filled by people who are not productive individuals, right? And that's one of the major shifts in the last 20 years that has led to this major societal decline. I highly doubt that anybody listening to this, I think the chances are you haven't been to a local state meeting, you haven't been to a meeting for your local government, for your town selectman, whatever it may be. And that is where change can be effectuated at the local level, right? The federal government can only do so much. They cannot save you. Right. The onus is on you to protect yourself, to provide for your family, and to make sure that your community is run the way that you want it to be run. You can effectuate that change in your own household. But if you're not making a concerted effort to do it at the state and local level, then all of your efforts could be cannibalized. Right. So like voting your way out of it has kind of become a meme. There comes a point in time where you need to recognize that there are voids that need to be filled. The people running potentially your town, your state, they're not cracked up for the job. They may not have been a productive member of society for their entire lives. I think that may be one of the reasons that Trump was elected as well, right? This kind of titan of business, this businessman who's proven he can run hugely profitable, wildly successful companies in the past. I think it would behoove anybody listening to this to try to do the same thing at the individual level. Because if you aren't willing, if you can see the problem and you aren't willing to effectuate the change, then effectively you're allowing it to occur. So I wholeheartedly agree with you, right? This shift to localism is something that Bitcoin, it really does embody. It gets you to think about these things a lot more. And I think it would really change the direction of this country quite a bit if more people were involved in their state and local government, and they made a concerted effort to kind of be the change that you want to see in the world. I think that's a meme as well. Right. But it's very true, right? There are only so many Bitcoin podcasts that we can do. There are only so many, conversations we can have with our friends and families at bars about, this needs to change or that needs to change. And there comes a point in time where like the crown is very literally lying in the gutter, whatever crown that may be. And the onus is on you, if you can identify that, to pick it up and try to fix the things, in your kind of area of, in your local area that need to be changed for sure.
I think we're also reaching this point where the cracks in the system have become so apparent that they can't be ignored anymore, right? Mm-hmm. There have been cracks in the system for a long time, but as during the prosperous years that the boomers enjoyed, right, when you could buy your home for a bushel of raspberries that's now worth a couple $1 million, those cracks were a lot easier to ignore, right? Now we're at this point where I think the housing market is such a key factor in this and everywhere, right? And no matter where you go, it's not just houses, but how many conversations do you have with random people or with colleagues, whatever, that are just about the price of everything, right? It's almost, it's almost absurd at this point how much of our general discourse is centered around prices just, are too damn high, like, and they keep going up. And everybody, it doesn't matter if you're a Bitcoiner or not, everybody feels that, everybody sees that. I think when it comes to the housing markets, the younger generations are understandably, we talked about them a bit earlier, understandably a bit nihilistic. And you're not going to start a family when you start feeling that you have absolutely no prospects. That's why you see declining birth rates among many Western civilizations. And it's not a good situation there. Like, the younger generations need to have hope if they are going to build families, if they're going to build businesses, if they're going to, pull themselves up by their bootstraps, as the boomers would have them do. But I'm curious, because I think you have an interesting perspective on the kind of the real estate market, the housing industry, just because of the work that you do. Do you want to maybe just talk about that a little bit and kind of what you see from your seat?
Absolutely. Yeah, my bread and butter. Let's do it. So
Yeah.
housing affordability is at an all-time low, and it's kind of comically low, right? This is the first time in our nation's history for a really extended period of time, since about 2022, that it has cost less to substantially less to rent than it has cost to own a home. And that's as a result of the rate lock-in that we saw during 2020 and 2021, and even into 2022, of people who own rental properties locking in extremely low mortgage rates, and now would-be home buyers, right, have to stomach these 6.5% rates. But talking about home affordability in and of itself, given the median average income, or the median income and the median price of a home, you need today about 8 years worth of pre-tax income in order to purchase a home. Whereas 50 years ago, it was more like 3 times your median income, right? And that's just for the
again.
Yeah, 3 times, right? Pre-tax, exactly. And so home ownership, in a very real sense, has gotten more than twice as expensive as it used to be. At the exact same time, young people are not just competing with their neighbor or their classmates from school or the people they went to high school with. They're competing with the entire world for jobs, right? The beautiful thing about this technology is that you and I are interfacing from, I think, several hundred miles away, if not a couple thousand miles away. That's the amazing thing, right? I can do my job from my laptop anywhere in the world. But the downside of that is that now my window of competition has increased from just the people who live near me and around me to literally the entire world. And so at the same time that homes have become more expensive, now instead of competing against a couple million people or 300 million people, if you want to extend it to the entire United States, to 7 to 8 billion people worldwide, right? And so it makes a lot of sense as to why young people are very, very they're saddened by their prospects. And it makes a lot of sense. Michael Green put out an amazing report. I don't know if you saw, about the new poverty level in the United States, where he recalculated everything. But just to recap for the viewers who may not have seen it, currently the poverty level, using its old measurement, which is the inverse of the food budget, so 3 times the amount of your budget that would go to food, is considered the annualized poverty level. That's at $31,200. But if you actually recalculate that using the cost of what everything is today, the poverty level is actually closer to $140,000 because housing makes up a much smaller percentage of everyone's budget these days compared to what it was back in the 60s and the 50s when this initial poverty calculation was first created. And so it really speaks to the financial nihilism and the feeling of young people that their prospects are further out of reach than ever. That's not unfounded. That's very true. Homes are more unaffordable than ever. And as a result, you start to see these major declines in these civilizational necessities like child rearing, right? The fertility rate in the United States has collapsed below 2.1. It's been that way for the last decade. That's like civilizational ending type stuff. The unfortunate reality is that at the government level, the things that we prioritize, i.e. making sure GDP is always above 2% quarter over quarter, means that we're not prioritizing our citizens, we're prioritizing economic output. And as a result of that, we have effectively one of the major things, and again, the reason that Trump was elected, is importing workers, outsourcing jobs, making it so that you're competing with the entire world, because the incentive is to make sure that GDP goes up no matter what, rather than individual prosperity is increased. And so these things are very real. Home affordability is lower than ever. One of the things we try to do at Horizon, our solution exists for existing homeowners who are sitting on this mountain of equity in order to buy Bitcoin with it. But there are very few solutions to get young people in the housing market. It's one of the cornerstones of the American dream, right? This idea of having a white picket fence, having your wife and child run around in the grass while you come home from work with your briefcase and your top hat. These are all things that people wanted and valued, and they're more out of reach than ever. And currently, the administration, the current political party, has not come up with any viable solutions, at least politically palatable solutions, for young people, right? The only thing that they've been able to come up with so far are 50-year mortgages, right? Which is effectively just permanent renting, right? Oh, you can own a home, but you're never actually going to own it. It's effectively like a solution that lets them have their cake and eat it too. It allows people who've been sitting in their house for ages to effectively sell into the market to younger people without actually giving younger people a stake in the housing market, right? They'll be paying that thing down until they're 80. They'll never actually own their homes, but it's a politically palatable solution because it will create new homeowners without dropping home prices. And so currently the Republicans have no answer to this. The Democrats have an answer to this. It's not an answer that will work. The answer is communism, right? The rise of AOC, the rise of Zoran Mamdani, Hakeem Jeffries, all of these people who are avowed democratic socialists, their solution is, well, we're going to steal money from other people and give it to you. And for young people, that is a solution that rings to their ears. They go, oh, that's great. I'm already working 3 jobs. I can take more money from quote unquote billionaires. That's great for me. Obviously, that's not going to work out in practice. It's going to lead to even more devastation and even more poverty than we have today. But on the other side of that, in order to combat that rise in socialism, the nationalists, the populists, the Republican Party needs to come up with politically viable solutions. And currently we have none. The only viable solution at the individual level is to save in a money that they can't debase, and that's saving in Bitcoin. And so that's why at the individual level, saving your wealth in a money that can't be debased is more important than ever, because the government at this point in time is not coming to save you. They're not coming to make homeownership more affordable. They are pining after votes. The 50-year mortgage is a solution they came up with because it will make sure that home prices continue to rise forever. And if you understand that the government is trying to make sure that home prices rise forever, that asset prices rise forever, then it behooves you, if you do want to claim in the American dream, if you do ever want to own a home, to protect yourself from that monetary debasement and increase the likelihood that you'll be able to afford one by purchasing Bitcoin.
Yeah, it's funny. I like to think of it. Fiat. If you save in fiat, you're losing purchasing power over time. If you save in gold, you're maintaining purchasing power over time. Gold has done a great job of maintaining purchasing power over time. You can still, the old like fine suit test of gold, a fine suit basically costs the same amount, nice tailored suit, the same amount that it did 100 years ago as it does today, priced in gold. But Bitcoin is how you grow your purchasing power over time. And it's, maintaining its fine gold, again, has done a very nice job for being analog Bitcoin. But we now have real Bitcoin, not just the analog version of Bitcoin. And I think that's a powerful thing. I'm curious your thoughts as well here, just before we run up to the end. I've seen a lot of people who have talked about the idea that the housing market is once again on the brink of collapse. That they're looking at all these things, and some of these people have perhaps been the boy who cried wolf for the past number of years. But from the seat that you're in, where you're paying much more close attention to this than I think probably the average person is, what are your thoughts on that? Do you think we're at a place right now where the housing market is once again teetering on the brink, or is there just such an absolute reluctance for any corrections to happen, because we know that so much of people's net worth is actually just is tied up in their home, right? This is how it is. We know what happened last time things got overblown. How are you looking at this right now, and are we actually in a position where we may see a massive correction in the housing market in the US specifically, or is it also one of those nothing stops this train moments where it's not something that will be allowed to happen anymore? That doesn't mean that anything will be fixed. It just means that they'll just keep bidding and bidding and bidding these things up with whatever means they need to. What's your take on that?
Yeah, so I'm of the opinion that home prices will continue going up forever. That sounds extremely stupid. If I said that, in 2007, that would have been a terrible call. The reason I say it,
yeah.
Exactly. The reason I say it now, and that doesn't mean we won't be in for some kind of correction, but what we've seen time and again is that the response time to any crisis from the Fed has grown lower and lower and lower and lower and shorter. So in 2008, it took over a year for them to respond to the first cracks in the housing market with actual intervention. In 2019, it happened overnight. When there was stress in the repo market, the Fed intervened overnight, made sure the system was flush with cash. In 2020, even more so, we printed tens of trillions of dollars out of thin air in order to make sure that asset prices were propped up. And so time and again, what they've demonstrated to me is that they're willing to step in and make sure that asset prices continue rising forever, rather than allowing for a prolonged correction in asset prices. Because a prolonged correction in asset prices, say like a 20 or 30% national drawdown in home prices, would mean a 5 to 10 year recession, right? A 2 to 3 year period of extreme pain followed by 7 years of rebuilding and getting back to where we were. And where we are today, homes are 55% of the average American's portfolio. And the US economy is just increasingly driven by spending and spending and spending. That's what GDP is, right? And so if we want to ensure people spend forever, we're going to need to ensure that their asset prices are rising so that the wealth effect kicks in and they keep spending money even though they don't necessarily have it. So for me, knowing how large of a chunk of the pie the average home is, the average American, and knowing that home prices impact people's spending behavior, but also the values of their 401k. It tells me, and also Trump literally just tweeted out today, he said he's going to make sure that the stock market keeps going up because it's such a major portion of people's 401k. If you extrapolate that same principle out to homes, the same is true for home ownership, right? So I'm of the opinion that home prices will continue going up forever. They're a politically protected asset class, right? After 2008, that's what we've seen. That doesn't mean we won't see a prolonged correction, but I just don't see it happening given the size that it makes up of the average American's portfolio. And so what that means for the person listening, we may see home underperformance. In fact, we've seen over the last year, home prices nationwide have only risen by less than 2%, which is well below the national average. During the 2010s, the national average was about, between anywhere from 3 to 4.5%. We are seeing a stalling out in home prices. I tend to think that there's going to be more turnover in the market as rates come down. People will be getting into homes, but we're becoming a country of permanent renters. That's the direction we're moving in, and that's even further confirmed by this 50-year mortgage becoming the solution that the Republican Party adopts to homeownership, which isn't real homeownership on paper, but you're effectively renting from the bank. And so, if that's the reality we're presented with, it makes more sense now than ever to allocate a portion of your wealth, a large portion of your wealth, to the asset that can't be debased, like you said, that allows them to grow their wealth over time. If they're not going to let home prices go down, you need to make sure that your purchasing power goes up. And the best way, time and again, over multiple years that we've seen that to allow that to happen is Bitcoin.
Yeah. And that's the thing. It feels as though we're entering this period. Lawrence Lepard calls it the big print. Like the big print is coming because there's just no way for the system to right itself or to reconcile itself. They have to the can must be kicked down the road. They cannot allow things to collapse because they won't. We've seen that now. And to your point, and I think it's exactly correct, the response time shortening. It's like they won't even allow things to falter for a moment. It's inject liquidity, do whatever we need to, just keep that can going down the road, because you can't let this stuff collapse. That's the thing. They know that even in America, if things start getting really bad, prices are already through the roof on absolutely everything. The price of everything is more expensive, and it will get more expensive forever, even though it should be getting cheaper forever. Technology makes everything cheaper. It's naturally deflationary. Jeff Booth has talked about this. I just had another conversation with him a couple of weeks ago about this. And I came out again just thinking, wow, it is insane how much has been stolen from us. Luckily, we have something that they can no longer do that with. We have Bitcoin. We can't be debased. This is such a powerful thing. I do hope that more and more young people, especially Gen Z, if you're feeling nihilistic about the future because you don't have a way to save, you don't have a way to plan for the future, you don't have a way to actually grow your purchasing power in this existing system, you're just stuck treading water, barely keeping your head above. Bitcoin is the way that you are able to do that, and it's really the only way. Maybe you can be a super fancy trader. You can try and outbeat Bitcoin's returns, but honestly, your best bet is find something where you can create value for society, save the fruits of your labor in a money that can't be debased, Bitcoin, and then do your best to live your life. And again, start from the bottom up, right? Start from yourself, start from your family, build a family. We got to get back above that replacement rate. We're all trying to do our parts here. But yeah, that is one of the most, I think, concerning things out there, especially across Western nations. You're seeing that replacement rate just not even be close to being hit. America's not alone here. The UK, all over Europe, you're seeing this is the case. I guess it's the curse of being a wealthy nation, is that apparently people stop having as many babies, but it doesn't have to be that way. But I digress a little bit. Joe, I appreciate you taking so much time with me here today. This has been a pleasure. A great way to round out this Thanksgiving week. A lot going on. Anything you want to leave folks with before we head out?
Yeah, stay humble, sack sats. I think what you said at the end was perfect. Provide value in your own right? God has imbued you with gifts. It's on you to find out what those gifts are, and then find a position where you could turn those gifts into money, and then save the fruits of your labor, as you said, in a money that can't be debased, right? That's what I'll say. That's a message I'll leave it on. Happy Thanksgiving. Hopefully everybody has plenty of leftovers this weekend to make yourself a nice turkey sandwich. And Walker, thanks so much for having me on, man. This was fun.
This has been a pleasure. We'll have to do it again. Appreciate your insights and analysis here. Again, thank you everybody for tuning in here to RoxomTV. I'll be back at my usually scheduled Tuesday shows next week and moving forward from there for the foreseeable future. So Tuesdays at 1 p.m. Eastern time, you can get me back here again on Roxom. Joe, we'll have to have you back on again. Again, Joe Consorti. He is the chief of growth at Horizon. Thank you so much for joining. Thank you, everybody. And yeah, stay humble, stack sats, create value, and go spend some time with your family. Again, time's the scarcest resource we have, even beyond Bitcoin. Thank you all so much. See you back here next time on RoxomTV.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, but I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?